Hello, and welcome to Lost Without Excel, where it is my goal to help you complete accounting tasks in Excel. Today's video is about a related party loan schedule. If you're looking for a schedule for tracking a fixed term loan where you have one upfront payment or upfront receipt of money at the beginning and then fixed monthly payments over a term, this is not going to be the most efficient way to do that. I also have a video about lease schedules that go over that exact example, and I'll link to it in the description. This video is about a loan usually from a related party where you are receiving money and paying money back kind of at irregular times. So what I want to do with this video is to show you how to track those irregular payments and receipts, and how to calculate the interest so that you know when you are doing your month-end journals how much interest to book, and whenever you're making payments, how much of each payment that you make to whoever you're borrowing from, how much to apply to interest versus the principal. So the end result is going to be two different worksheets, and I'm going to show you kind of an example of what the end result looks like, and then we'll build it. So the sheet that I have up on the screen is the monthly summary. So essentially what you would use to do your journal entries at the end of the month. So let's say that in my example with this data, if we're talking about March of 22, after we go through all of the money back and forth to our parent company, at the end of the month, we have $2,021 of interest to book. And this is just kind of a helpful way to reconcile your accounting records to the schedule. It's easier to do it on a monthly basis as opposed to a daily or weekly. And this also has a lot of information that someone kind of higher up in your department might ask for. So they might want to know on a monthly basis what was the total cash going back and forth, regardless of if it was for interest or principal. Even though in our accounting records, we're going to keep the balance of the loan and the cumulative interest, most likely, or at least we should be keeping it in two different general ledger accounts. Someone might want to know what the total amount is combined. So that we're going to have this information here too. So there's no actual modifications that we're going to do on a regular basis to this worksheet, because along with this, we're going to have a daily schedule that looks something like this, that instead of having, I titled that wrong, instead of having the months in the first column, we're going to have days. The reason that we're doing this is, for example, if we go back to the monthly schedule, if this was where we had all of our calculations, when we have a month, let's take May for example, where there is no drawing down or payment, and so our beginning and ending balance is the same, it's easy to calculate the interest because it's the amount that we're applying that interest to is the same throughout the month. But if we go to a daily example, let's take February of 22 for example here, we have one balance for 13 days and then a different balance for 15 days. So if we were only tracking on a monthly basis, we would either have to kind of manually calculate the interest, or we'd have to kind of have like a separate notes off to the right where we indicate which day the payment was made, and it kind of creates a funky formula. It gets to be really clunky and kind of defeats one of the purposes of doing something like this, which is putting something in and kind of letting Excel work for us to calculate the interest, or to just kind of make our lives easier. So what I'm going to set up is something that's going to look like this worksheet, where we're going to calculate our interest and payments and everything on a daily basis, but usually what we want is a monthly summary, and so we'll create that as well, because that's going to be more useful for the people that don't need to be kind of down in the weeds of the details of this. So I'm going to start with the daily schedule, and I've already loaded in the headers here. So if you need to pause and get the headers, it's easier just to start with this because you guys don't need to watch me type everything. So go ahead and pause and come back when you're ready, but I'm going to kind of move ahead, and this one is days, not months over here. So the first thing that we're going to do is whatever month we need to start. I'm doing January of 2022. I'm going to put the first couple of days in here, and then just copy this down to however far we want to go. So let's just say we'll copy down further later, but for now we'll just get a series of days. If you're not starting, if this loan doesn't start until June or July of the year, you might as well just start the first day of the month, or even just the first day of the month that the loan's created. We're starting with a zero balance. These columns here for kind of how much we're drawing down and how much we're paying, these are going to be what we're going to enter whenever there's loan activity. So a good habit to be in is to, if you have a worksheet like this where some of the cells are going to be formulas and some are going to be manual entry, color one of them a different color, or color them both with different colors, and then put a note somewhere at the top so that people know that if you come here and you want to enter in data, to do it only in this case where the yellow is, or whatever color this is showing up as on your screen. So kind of continuing across here, I'm just going to go left to right for the first row, and then I'll eventually just copy it down to everything else. So the ending balance on a given day for the loan is just whatever we started with plus what we received less what we paid. I'm going to do it as a sum because I'm actually going to do all these payments as negative numbers. I'll show that in a few minutes. The interest for a given day, so I'm going to use 8% as my interest rate and just fix it up here. On a given day is going to be whatever balance we ended the day with multiplied by our percentage rate over 365 days to get to a daily rate. The interest payment is something else that we're going to enter manually. Our cumulative interest, in this case it's the first day, so it's just going to be whatever today's interest was. The net cash is another manual entry, and our cumulative interest and principal is just going to be whatever the total loan is plus the interest. Obviously, all these numbers are zero, but it'll make sense kind of as we go. So like, let's just say that day one of the loan, we borrowed $50,000. So our formula is going to say, so we started at 0, but we ended with 50. So we're going to take 8% and take a 1-day interest is $10.96. We haven't paid anything off. That's the entire cumulative, and so our cumulative interest, and so together it's $50,000 and $10.96. And I think I forgot to do this. I would always put unit measurements, whether that's dollars or whatever other currency you're working with. So when we go to the next day, rather than starting at 0, every day is going to start with the beginning balance is the last day's ending balance. The ending balance formula isn't changing. The interest isn't changing. We're still just doing this percentage divided by 365 times whatever we ended with. But in this case, the cumulative is a little different. In this case, we're going to start with yesterday's balance plus today's interest. And then this over here isn't going to change either. So the first row's formulas are a little different than everybody else's. But now that for the second row, we can copy that down. And all that's happening is, since we just had the one loan draw, we're going to have the same balance every day and the same interest every day. But let's say that a few days later, we borrow another 25,000. Now it's going to shift over. We can do this as much as we want because we can borrow and pay back several times during the month. And because we're doing it on a daily basis, this will all recalculate. Now let's say that later on in the month, we're going to pay back, I don't know, let's say 50,000. So rather than enter 50,000 here, generally what we're doing is we're paying back all of the interest through yesterday. And so this is actually going to be 50,000, and we have to take away the interest because we want the rest of this to be the interest here. And I forgot to do a formula here for net cash. The net cash is just basically what are we drawing plus what are we paying back in loan and interest. And this is just kind of tracking on a daily basis, kind of what's going back and forth. So this would be the total here, but when we make payments, we want to pay back our interest first and then pay back the rest of it to principal. So this same concept applies. We can go down however many months. I'll just go to the end of the year for this one. But assuming that nothing else was changing, no more activity, I'll plug in a few random ones here. Assuming that we just have some random activity, we'll pay back 50,000 here, less the interest. And then I'll just borrow a couple more times and then be done with it because I think you all will get the idea here. Okay, so in terms of the daily schedule, this is done. We can extend this going out another year or two if you want. If this gets to be to a point where there's just a lot of activity, when you're rolling this over, if you wanted to kind of just have like a daily schedule per year instead of the cumulative one, if we were rolling this over to 2023, my beginning balance would just be whatever my ending balance was here, this 204 and change, and then I would kind of delete all of the values in these colored cells, and then I would have my schedule for the next year. But in this example, I'm just going to assume that what we're after is a schedule for 2022. So that's it for the daily schedule. For the monthly schedule, for this example, I want to put the first day of the month as my starting point here, but I want to display it as the month and the year. The way that we can do that is even though I'm typing in the 1/1/22, if you do that somewhere else that isn't already formatted, it'll probably stay like that. But I find it easier to read the months. And so what I do is I'm going to go to format the cells. And one of the date options is in here, the month and the year. Or you can do something like this where you're doing a custom to show the month and the year. Let's say we wanted that. It's your preference, obviously, but I would change that to something with the name. Okay, so now what we're going to do is once we're done with, and this one, by the way, I forgot to zero that out. This one, just for the sake of, in case we print this for some reason, I just want this to link to the interest rate just to display it. There should be, on a monthly basis, no manual changes to anything on this sheet. Everything that we do should be updating this daily schedule in these designated columns, and everything here should be left alone. So if you're working in a department where other people are going to be using this, it's not a bad idea to lock this worksheet so that no one messes with the formulas. But what we're going to do is there's only actually two formulas I'm going to use here. As an XLOOKUP and a SUMIFS statement. So I'm just leaving these at the top for reference if you're not familiar with those. But what I want to do for my beginning balance is I want to do a SUMIFS statement. And I'm sorry, I'm doing XLOOKUP. SUMIFS is next. We're going to do an XLOOKUP, and I want to go find this value in the daily schedule. And when I find it, I want to know what the beginning balance is. The reason that this should be the 1122 instead of the word January 2022 is when I do the XLOOKUP, I want to be able to find the numbers, which is how the daily schedule is. And so if I do the same thing, if we copy that down, this is going to pull the whatever balance was in the beginning balance column for the first day of each month. For the loan draw, I'm going to do a SUMIFS statement. So a SUMIFS basically means I'm doing more than one criteria. If I only needed one criteria, I would be fine with a SUMIF. But what I'm going to do here is I want to add up all of the loan draws for all of January. So the way that I'm going to do that is loan draws for all of January are going to be C, or column C on the daily schedule. And what I want is I want to add up every example of column C where column A is January. So I want column A and to capture all of January. The way that I'm going to do that is I'm going to have two criteria. I'm going to say where column A here is greater or equal to January 1st and less than or equal to January 31st. So the way that you can do that is I'm going to put in quotes greater or equal, and if I can get my keyboard to work properly, to greater or equal to, and in my case, it's A5 over here, is my date. And then, whoops, I did this wrong. Sorry, there's not supposed to be a column there. I just need to do A5. And then I also want column A here to be less than or equal to the end of the month. In this case, because I don't have that listed, I'm going to do an end of month formula where I'm going to still grab A5, which is on the monthly schedule. That's where that date is. And I don't want to add any months. What did I do wrong here? Okay, I forgot one thing in here, and over in the middle where I had the greater or equal to A5, I forgot the and symbol. And over here, I forgot the and symbol. So in this case, what it's doing is this formula is going over to the daily schedule, and it's going to add up all of these amounts in the loan draw column for January, which you can see down here is 93,000, and it's going to give me the summary here. I can do the same thing all the way down, and now we have a summary of all of the times that we got a loan draw. I don't want to have to redo that complicated SUMIFS again. So once you get it right once, what I'm going to do is I'm going to copy this and I'm going to paste it in a few columns here. And the reason for that is since I know that these columns are the same on my monthly schedule and my daily schedule here, because I wrote the formula for column C. When I go here for column D, I'm just going to change this from C to C to D to D, and now I have my loan payment done. The ending balance is just the sum of those. Then here. Again, this was from C to C, but I'm doing column F now. So I'm going to change it to F to F. And we have the interest. And so basically, I mean, you can redo the sum if statements if you prefer. But I'd rather just write it once and then kind of change the formula for the rest of the columns. Kind of similar to our the daily schedule for the first month. The cumulative interest is just whatever the current the first month is. Our net cash is going to be the draw and the loan repayment and the interest repayment. And then our total interest and principal is going to be whatever our ending balance is plus our interest. So in this case, we have our January of 2022 is 43,616. We're basically just grabbing the ending balance from this row here for January 31st to get kind of our ending balance numbers, and then we're adding up all of these back and forths for interest payments and loan draws and such for the whole month. So for almost all of these, I can just copy these down, and for everything that was a sum ifs, because we're only dealing with columns here and copy down the rows, nothing's going to change. The only difference is for the cumulative interest. We started with some last month, and then similar to the daily one, the first row is different, and then the second through whatever has a different formula than the first row. And then we go on, and just to make sure that I'm not crazy, we should be at 217,174 as kind of our ending for the daily schedule, and our monthly schedule now shows the same. I'm also going to add dollar signs to this, just that's the way I like to do it. Okay, so now what we have is, I'm going to get rid of these notes up here, is a situation where we can keep this schedule where we can, whenever we get money or receive money or pay back money, and this would work for either the parent or the child side, we would just, parent company or child company, we would just obviously reverse the journal entries where the parent will be recording this interest and the child company would be recording the interest expense versus interest income. The only last thing that I wanted to mention on this schedule is if you're concerned that you might type in, for example, a date that's not covered by the schedule, and we would get some NA errors here. For all of these values where it is the sum if, those aren't the issue, because it's basically going to the daily schedule and it's not finding January of 23. So there's a couple things that we can do. You can either copy some of this and just extend the schedule, because assuming we've written those formulas properly, we should be able to just drag everything down and then it'll appear. But if you really want to, so if you're running into this issue, I normally would correct this NA error. In this case, I don't really want to, because I would like it to show up as we have an issue if we're trying to summarize something on the monthly schedule that's not on the daily schedule. So if you look at some of my other videos, I do have a tip on fixing NA errors in your formulas, but in this case, it's actually good for us to have it, because we do have something to go fix if we're asking to summarize a month that we don't have on our daily schedule. I'll move this back to get rid of it though. So that's it for this video. I hope you find this helpful. Again, if what you were looking for was a fixed term loan, I have a different video for that. But hopefully this helps you track and reconcile a related party loan. I will see you on the next video. Thank you.